Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Another busy morning. There could be a new front in the Iran war. We just heard from the new Chancellor, of course, of the Exchequer. We also will discuss in just a moment all of this with Themos Fiotakis from Barclays. But first, CapEx has been the focus of the tech earnings overnight. Alphabet's increased spending plans, raising concerns that the company will forego fiscal discipline in the race to dominate AI. And let's get more with Matt Bloxham, technology analyst at Bloomberg Intelligence. Matt, I mean, it's all about earnings and it's all about tech earnings, especially focused on AI. So in addition to Alphabet, Tesla's AI ambitions are also coming at a cost. So how concerned are investors? There's just a lot of capital spending out there.
Yeah, I think the concern is definitely on the rise, particularly given the increased guidance from Google. I think if you put the CapEx story to one side, if you look at the Google numbers, they're actually pretty good. Slight beat on revenue, about 1%. Most of that coming from their cloud business, so selling capacity in the data centers. The core search advertising business holding up well, but slightly less growth than people expected. But what we're not seeing is like a big step change in the revenue to kind of go alongside that higher CapEx. If you look at their forward order book, it grew, but not massively. So they didn't bring in any other big orders beyond Anthropic. And so I think really for investors to feel confident that this CapEx increase is directly linked to incremental revenue opportunity, people wanted to see more in those numbers, and we didn't get it. And then that extends to the worry that, well, if Google's raising their CapEx, then Meta and Amazon are going to follow too, and you suddenly get into an incremental arms race, and it starts to kind of stretch the credibility of the return on capital story.
Matt, so this is, without a doubt, our number one focus. But then I'm looking at STMicro shares, and they're actually also under pressure this morning. So did they disappoint investors? Yeah, they did. I mean, there was a soft Q3 guide on revenue, not much below market expectations, but below, and then talking about making that up in Q4. But, I think people want to see it earlier rather than later. They slightly upgraded their outlook for revenue from data centers, so north of $1 billion this year and well north of $2 billion next year. But they'd kind of signaled that already. And I think given the positive momentum in AI, that's the least that people are expecting to see. The problem, I think, with STMicro is that the profitability was way, way lower than people expected. And that's obviously a big part of the story, too, that input costs are rising across the sector. And that's something that all of these companies need to manage more effectively. Matt, thank you so much. Terrific briefing, as always, to get us started. Matt Bloxham there from Bloomberg Intelligence. Now, oil extending its rally after Houthi militants say they're targeting 2 Saudi Arabian tankers in the Red Sea, reigniting fears that higher energy prices will stoke inflation and push central banks to hike rates. Now, I'm joined by Themos Fiotakis, Global Head of FX Strategy and EM Macro Strategy at Barclays. Thank you for joining us, Themos. We'll get on to the AI in a second, because that's also pushing up inflation probably at the margins. But what's your take on oil right now? If you look at the markets and actually inflation expectations, what are they most worried about? I think that it's a combination of the fact that you have some pressures coming from the spending, particularly in the U.S., AI and all that, and its solid growth. The fact that you never really had a bond rally when oil prices dropped, partly because of the supply of fixed income, also from the private sector, but also from the public sector. And also inflation expectations not collapsing either. And now, on top of that, you have oil prices going back higher, which tells you that the dip that we saw in global inflation prints may be a little bit too technical, a little bit too temporary, which puts central banks in a difficult spot, because it's not just about the delta. It's also about the question that the central banks are asking us now: do we have rates at the right level for the current inflation activity? And you think we do? I mean, in the U.S., they're not in a bad spot. Yes and no. If you think that hyperscalers are going to be spending trillions for the next few years, that puts you in an output gap that is wider than what you thought last year. Last year we were expecting, $300 billion of capex. Now we're expecting trillions, and that number keeps going up and over time. So you need to have some accounting for that.
And obviously, if you have oil prices, high, but also volatile as well, because it's also possible that this, situation in the Middle East is a stop-start situation that affects the volatility of inflation expectations. And
that could last for quarters, if not years
Correct.
to come.
And given the starting point of inflation never really reached the target in the U.S., they might have to reconsider.
So, Themos, what do you say? So what do you see as the next move from the Fed?
I think that the risks are for a hike. And I think that, obviously, our call as a bank is flat for now, but we're acknowledging the risks for a hike. Now, the problem is that if they hike, they're unlikely to go once.
Right.
It wouldn't make sense as a calibration, right? You're not saying you're wrong for 25 bips. So if they do move in that direction, the market is not going to price one hike.
But the CapEx, again, the correlation between actually a hike and what that means for CapEx spending from AI is unclear to me.
It is unclear. For now, from what we understand from our analysts, these issuers are price insensitive to some degree.
Yeah.
So, and to me, I think the bigger question with CapEx with respect to the U.S. economy in general is this. Is this a higher cost for doing business in cloud space?
Yeah.
Let's just say more generally. Or is this something that is going to create a transformative monopoly for the U.S.?
Yeah.
Because it will be the only country that will have that kind of infrastructure.
Themos, talk to me a little bit about the UK. Now, we also caught up with the Chancellor, of course, the new Chancellor, John Healey, this morning at Bloomberg headquarters, and this is what he had to see. This was his message to the city.
Fiscal credibility is the bedrock of economic stability, just as it is of national security. And the Prime Minister and I have talked together about how we will work in lockstep to ensure that we meet our fiscal rules with a buffer against uncertainty.
Themos, this is clearly the Chancellor trying to reassure markets. In fact, his very own pick, the fact that it wasn't Ed Miliband but John Healey, points to the fact that they want to reassure the markets. But where do they find the money to do all the spending they want to do?
First of all, let me just start by saying that I think that the UK's public accounts take unnecessary negative critique. The situation is not too bad.
What, from bond investors?
From bond investors, yes. But the market sees that with that kind of an angle, and it is what it is, basically, right? And with that angle in mind from the market, I think that they're walking into a very difficult situation. Obviously, they need to have their market their way. I mean, this is the lesson that every single UK politician has learned since the Liz Truss situation. But I think that also every new prime minister that comes in, they have a lot of people to satisfy, a lot of different sides that have demands, basically, right? So inevitably, they'll have to give something, and they have to cost it, and they have to compensate for it, and that accounting is very difficult in the UK today.
So what would you, are you buying gilts at the moment?
Actually, no, and in fact, we have a short recommendation in the pound, actually, having it traded a little bit too positively on the back of reassurances. As things get specified, might get a little bit murkier.
Yeah, we have a lot of questions. Themos Fiotakis from Barclays stays with us because we also talk about the ECB next, because the European, of course, Central Bank is widely expected to keep interest rates unchanged when it meets today. The decision would allow officials to buy time to weigh the implications of renewed fighting in the Middle East, leaving the door open for a move in September. Now, for more, we're joined by Bloomberg's Jana Randau, who's at the ECB headquarters in Frankfurt. Good morning, Jana. So nice to see you. So what are we expecting from today's meeting? And is this really an opportunity for the ECB to assess what happens in the next few months?
Good morning. Yes, it is. So we are not expecting a change in interest rates today, but we are keeping a very close ear to what the president has to say on the economic situation in the Eurozone, and even more importantly, about the risks. Now, on the former, things had looked up really earlier this month. Inflation has come down much faster than expected. The economy was really holding up well. And then, of course, tensions escalated again in the Middle East, new attacks between the US and Iran, and that has basically thrown the ECB back to square one. So what we'll hear today is how they assess those risks and what they intend to do about it potentially in the future. We expect the president to throw it towards September when new staff projections will be available. They will be really, really key in deciding whether another hike is coming. Economists and traders, of course, expect one. And also in September, we may not know a little more about whether the president herself will stay at the ECB. She keeps fanning rumors of an early resignation. She hasn't really said she's leaving. She also hasn't really convinced me that she's staying. So more on that, maybe even today as well.
Jana, thanks so much. Jana Randau there with the very latest from ECB headquarters, and we're back with Themos Fiotakis from Barclays. I mean, Themos, actually, so we'll get onto the ECB today in a second, but if you look at the difference in rates between the UK and the Eurozone, I mean, that goes back to your earlier question. Does it really make sense? I mean, I know the economies are in different cycles, their composition is different, but actually the rate differential is quite remarkable.
It is remarkable, and particularly if one contrasts it against growth. On the other hand, I have to say that ever since Brexit, the UK economy has been a lot more, has faced a lot stickier inflationary dynamics, basically, right? And if you are the Bank of England, you are facing a situation where inflation has overshot your forecast quite consistently. Yeah. And there are some voices, as we know, some of them I used to work with in the past, in the Bank of England that say that regardless of what our path is and our forward path is, there's something we're missing that is making the economy a lot more inertial in terms of inflation. And that is an issue that is being compounded again with energy prices.
What do you think? I mean, what do you think that is? And again, is it something structural? You know, is it a structural concern?
My own sense is that with Brexit you get an inevitable supply shock, and that supply shock has also been, to some degree, moderated by some fiscal easing during COVID, and then some fiscal easing again at the beginning of this administration. So sort of like trying to address the pressures that you get to the supply side of the economy with a little bit of fiscal impetus, I think that generally tends to lead to stickier inflation dynamics.
Themos, overall, I mean, I'm going to ask you what you're expecting from the ECB, but actually, what's your favorite FX pairing at the moment? Because we also have Japan. There's just a lot going on, and we have renewed, maybe possibly trade concerns when it comes to the U.S. and China, and certainly the U.S. and Canada.
I have been on the side that has like the dollar, despite all the bad sort of like press it gets. And I do think that the dollar tends to do best against Asia at a time where yields are going higher, and dollar yen I think is likely to continue going, basically. So that's where I'm looking at.
So interesting. Themos, thank you so much for being with us today. Themos Fiotakis, Global Head of FX Strategy and EM Macro Strategy at Barclays. Coming up, UniCredit closes in on Germany's Commerzbank, plus a trading boom at BNP. All of the details on the latest European banking news, that's coming up next, and this is Bloomberg.
July 30th. The Bank of England makes its next interest rate decision, and investors will look to BOE Governor Andrew Bailey for signals on the rate path ahead.
Inflation is higher than we expected. Of course, now what we've got to do is get it back to 2%.
Join the opening trade team for live market reaction and analysis and on-the-ground coverage at the Bank of England. It all starts July 30th, 12:30 p.m., only on Bloomberg.
BNP Paribas has reported better than expected revenue and profit for the second quarter as its stock traders blew past expectations. Well, earlier we spoke to Lars Machenil, the Chief Financial Officer at BNP Paribas.
We clocked in this quarter at 39 basis points compared to 38 a year ago. But if you look at the cost of risk in our divisions, it is basically stable. So intrinsically, with whatever that has been happening on the divisions, there is no pickup, it is stable. So what is that additional basis point coming from? It's because we took a prudent stand saying there is some geopolitical uncertainty, and that allows us to take a generic provision for that uncertainty. So that is a provision that we took. If at some point in time the geopolitical situation would deteriorate and there would be higher cost of risk, we would use this reserve that we have created this quarter.
And Lars, can I ask you about what's happening with the technology build-out, the frenzy around AI and data center rollout, and how we see that evidenced in the business that BNP Paribas does? We heard from somebody at Barclays yesterday who was talking about a golden age for technology right now. So many trends happening at the same time, and so many companies wanting to tap markets as a result. Is this something that you think is happening outside of European banking, or is European banking intrinsic to these developments?
You see demands a bit all over the world. If you go into Asia, the US, it is rather than the AI super cycle. If you go in Europe, there are also structural demands, infrastructure, energy. So there are a lot of investments that are happening. And so we see that pickup. And again, we, with what we have, both in the global markets, but also in the financing activities, and given our capital position, we are there to support. The one thing is, you know us, we are a bank, we are prudent, so we have to be, we see a lot of demand, but we have to be careful and to avoid that we would underwrite things that would make us think of what we saw back in 2002.
Well, that was Lars Machenil, the BNP Paribas CFO. Now, UniCredit has reported higher than expected profit and raised its guidance as Chief Executive Officer. Andrea Orcel moves closer to a takeover of Commerzbank. Let's bring in Bloomberg's EU finance reporter, Stephen Ahrens. Steve, thank you for joining us. Let's start with earnings. How good are this morning's UniCredit numbers?
They're pretty good. They beat on profit. They lifted the outlook. They announced new dividends. So, you know, from a market perspective, investment perspective in UniCredit, it's been pretty good, even though the shares are down a bit after a strong rally in the stock, and the industry as a whole is not doing very well today. But the earnings themselves are pretty good.
So, Steve, what more did we learn in this morning's announcements about the Commerzbank deal?
So that's actually the more interesting part today. As you probably know, the takeover bid for Commerzbank by UniCredit ended earlier this month, and they managed to get almost 50% in Commerzbank. So it's very likely they will assume control, and that's what they're saying in the release today. They're saying we're expecting to take control of Commerzbank once we get regulatory approvals, which may happen at the end of this year. And then they will set out, Orcel, the CEO, will then implement his vision for Commerzbank, which will entail a very deep restructuring of that German bank.
Steve, I mean, did you see a difference also in the tone from the German side? Are they more open to negotiating? Like, what can we actually expect in terms of timeline?
So it seems they are. We had this nice scoop recently where we say the German government is opening up. It's softening its rhetoric toward UniCredit. It used to be extremely opposed to the deal, but they're realizing the takeover is pretty much inevitable now, given the shares that UniCredit will own in Commerzbank. And so they're saying, okay, rather than just trying to stop the deal, we're going to try to influence the deal and sit down perhaps with UniCredit to debate what exactly we want for Commerzbank in the future once UniCredit controls it.
Stephen, thank you so much. As ever, Stephen Ahrens with the very latest on this banking news. Now, a court ruling allowing the far-right leader Marine Le Pen to run in next year's presidential election has raised alarm bells for bankers in Paris who relocated from London after the Brexit vote. Now, the expiration of the generous French tax breaks is also a concern for these bankers, with some now discussing relocating to cities like Dubai or Milan. Well, Bloomberg's Claudia Cohen has more on this story. Claudia, it's a great story, deeply researched. So let's start with these tax breaks. How important have they been in bringing bankers to Paris?
Hi, Francine. Thank you so much for having me. Well, the tax break was extremely important for Paris to appear attractive in the eyes of the US management. Let's recall that after Brexit, of course, all the international banks, the US banks, were looking for a new European headquarters. And Paris at that time, was it on top of the list? Because, as you know, the labor cost in France is quite expensive. But these tax breaks, which basically only allow workers who are coming to Paris. So it's either foreign workers or either French workers who were living outside France for at least 5 years. They are getting a big tax break. It can be between 30% and 50% of the total revenue that is not taking into account when you do the tax-based calculus. So the tax break was extremely important. And as you mentioned, all the bankers, they knew from the beginning that this was this deadline because the tax break is for a maximum of 8 years. For the first bankers who came to Paris after the Brexit vote, so for example, Bank of America had the first transferees coming to Paris around 2018, 2019 for this first wave of bankers. The question is now, what do I do?
So, and how much of a factor then, Claudia, could France's presidential elections actually play in whether bank staff stay in Paris or France or leave?
It's a very important factor because, first of all, obviously, you have the personal thinking. If you have kids in school in Paris and you really love the city, you have all your professional network, like those are natural questions that we all knew those bankers will ask themselves. And now politics is in the mix more than ever because, as you probably saw, we realized those past few weeks that it will be Marine Le Pen will be the candidate for the far-right party in France. And Marine Le Pen is seen by the market, but by those bankers also, and broadly in the business community, as less business friendly, as protégé Jordan Bardella was. So the bankers are a bit worried, and also, and we pointed out in the story, the far left is having a big momentum also. So for the bankers, there is a bit of a scary story if the far right and the far left have chances to win the election, because it could be, a way less business-friendly environment, but also even more taxes coming for the wealthy.
So interesting, Claudia. Thank you so much. It's a really great piece, and I urge everyone to go and see it, and we'll also push it out on social media. Now, Alphabet raised its capital spending forecast to as much as $205 billion this year. So you can see Alphabet, let's see, pre-market trade, if we have that for you. Yep, down some 3.9%. Tesla profit also tumbled despite a strong quarter for its automotive business. So if you look at Tesla, that's also under a little bit of a pressure, and Tesla down 5.4%. So we'll have plenty more, of course, on that throughout the day. If you look at U.S. futures, the focus is definitely on AI and the AI spending. Some of the fears around that are growing. We're also looking at the continued rise in oil prices, casting a spell actually over markets after the Red Sea seems to now be becoming another flashpoint of disruptions to shipments from the Middle East. So we'll have plenty more on that shortly. We also got the view from Rachel Ellehuus from the Royal United Services Institute. So that's coming up shortly. Stocks falling again because of all of this unease, with S&P futures down and NASDAQ also down as well. This is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Alphabet raises its capital spending forecast to as much as $205 billion this year, reigniting concerns about the cost of AI. John Healey, the new UK Chancellor, vows to meet fiscal rules with a buffer as he makes a pro-business pitch to the City of London. And the Houthi militant group in Yemen say they have targeted 2 oil tankers in the Red Sea, threatening to open another front in the Iran war. Now, staying with the developments in the Middle East, and the U.S. has completed 12 straight nights of attacks on Iran, with President Trump warning that the U.S. could target bridges and also power plants. Let's bring in Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. So, Onur, thank you for being here. Is the conflict now bigger, and are peace negotiations further away?
Yeah, the conflict is definitely bigger. The Houthi attack that you just mentioned, Francine, opened a completely new front in this war that began in February. This is the first time that Houthis have struck or claimed strikes on oil tankers in the Red Sea in months, basically, and definitely the first time since the conflict began. And it risks the possibility that more oil flows will be removed from the markets, because Red Sea is where Saudi Arabia especially relied on to get its crude out after the effective closure of Hormuz after the Israeli and American bombings of Iran in February. As for peace talks, President Trump has repeated that Iran wants to have a deal with the U.S., and so did Marco Rubio, the U.S. Secretary of State, just minutes ago. But that's not the narrative coming out of Tehran. Iran insists that it is not in a rush, or it doesn't even want to talk to the U.S. For a possible deal until the U.S. stops violating the Memorandum of Understanding signed last month between the two countries.
Onur, the U.S. and Saudi Arabia have finalized their nuclear technology sharing deal. Will that exacerbate tensions across the region?
Possibly, maybe not in a very direct manner, but yes, because this deal, which has long been in the making, could allow Saudi Arabia to enrich uranium on its soil, and that contrasts with the stated objective of the U.S. war on Iran that's been going on for 5 months, which is to prevent Iran from acquiring nuclear weapons. So yes, it's not the same thing, but it raises the fears that once you allow a country in the Middle East to have nuclear enrichment on its soil, it could spur a race for similar deals by other countries in the region. We know that Egypt and Turkey have similar ambitions, and eventually it could spur a race for nuclear arms. U.S. officials, including the Secretary of Energy, has stated that there are very strong safeguards to prevent such an eventuality, but still lawmakers in the U.S., including members of the Congress, do argue that this is a real risk down the road should the U.S. go ahead and allow Saudi Arabia to enrich uranium on its soil.
Onur, thanks so much. Onur Ant, Bloomberg's managing editor for the Middle East and North Africa. Now, for more analysis, let's bring in Rachel Ellehuus, Director General at the Royal United Services Institute. Rachel, always great to speak to you, especially on a week where we're trying to figure out what happens next, because there does seem to be, I guess, wars or certainly skirmishes on more fronts. Does that mean that there's a clear escalation, that the situation is much more dangerous?
It certainly feels like it, and from my view, I think a definitive resolution to this conflict is unlikely, and what we're likely to see is probably periods of escalation followed by periods of de-escalation. So just persistent instability in the region. That MOU and the ceasefire that we saw, that was just a pause. That wasn't a complete resolution, and a lot of the details that would have made it such were left on the table so that both sides could read into it what they wanted. The Houthis could see, the Iranians could see an opening by which they might get sanctions relief or seen some of the assets unfrozen, and the United States could assure shipping companies and firms that they could get through the strait.
But having now the Houthis involved, like what does that mean going forward?
Yes, we have the Houthis involved. They're putting pressure on the Red Sea, directly confronting Saudi Arabia. The other thing that I'm noticing is ships had been trying to pass close to the territorial waters of Oman, and there are strikes there as well. And so I think what the Iranians are saying to the region is that we've got partners in the region as well, and we can continue to exert pressure not just on Bahrain and Kuwait and Jordan, but also open that to Oman and Saudi Arabia, who at one point had been slightly more sympathetic to the Iranian cause.
But so this could last years with a kind of like a stop and start, because what is also surprising is that on either side you don't really see, or maybe I'm reading it wrong, but you don't see a wanting of clear de-escalation.
I don't think either side wants all-out war. I mean, let's think about that. The Iranians really do need cash. They do need that sanctions relief that we just talked about. And on the U.S. side, I think Secretary of War Pete Hegseth said this war has cost over $35 billion to the United States so far, and then we still have all the problems with rebuilding readiness in the U.S. forces, replenishing those capabilities, rebuilding bases that have been struck. The U.S. is also under tremendous pressure. But what brings them to the table? I think that we're probably going to have to accept some change in the status quo. Yeah. The Iranians have been pushing for monetary payment for safe passage through the Strait. Nobody wants that, but I fail to see that strikes alone can bring this to conclusion.
Does the U.S., I mean, there's two things that could bring, I guess, President Trump to change tack. Does he need to ask Congress for the money now?
Well, he does, and that's what Hegseth was up making the case for a few days ago. And certainly every time the administration goes and asks for money for a war, which they see as a war of choice, that's taking away from other domestic priorities, as well as international priorities, like focusing more on the Indo-Pacific and the long-term challenge from China. So this war is not popular. So far, he's been able to keep the Republicans on side and get through that increased budgetary support. But U.S. national debt skyrocketing, this comes at a price somewhere.
I mean, do we assume that in the lead up to the midterms, it de-escalates?
I would hope so. I think that we've probably got a couple more weeks of strikes ahead of us to degrade those Iranian capabilities and maybe even some of the Houthi capabilities. But we are likely to see, again, a period of de-escalation just before the midterms to try to claim victory, at least at a surface level, and stabilize things. But again, no guarantee that this resolves the problem.
Rachel, how strong actually is the Iranian regime right now?
I think they're quite split. I think we see two camps. We see one side that's open to engagement and wants a resolution to this conflict. We see another side, the hardliners led by the IRGC, that really say the time is over for negotiation and we can't trust the United States. And so with that limited space for engagement, what I'm worried about is it shuts down, and what we get is a victory for the hardliners who don't want dialogue and don't want a solution, and then we get a more isolated and dangerous Iran.
But if you're the UAE, if you're Kuwait, if you're in Saudi Arabia, you can't really stay in the spot. So how are they going to organize themselves?
Yes, well, right now I think we see them getting more involved on their own. Oman in particular had painted itself as quite neutral and staying out of the conflict. We've now seen them stepping forward to take some action to defend their assets in the south. I think Saudi Arabia is drawing closer to the United States. You just mentioned the long-term civil nuclear deal. So while they're unhappy with the U.S. behavior in the region and the fact that there's this instability that they didn't invite as a result of the Iran conflict, they still realize that the best path towards resolution and security is keeping the United States engaged in the region.
Is China actually getting more involved or trying to get more involved to try and calm things down?
I think China will have to get more involved because a lot of the oil that was leaving through the Red Sea route was going to Asian markets. And so China is going to see, despite its clever stockpiling and resilience in terms of energy and gas, that will run out at some point. So I think it needs to at least show that it is also very concerned about what's going on.
I mean, we'll, of course, have the war in Ukraine. And then there's a lot of question marks about what China will do with Taiwan. I mean, the more the Middle East is uncertain, does that make it more likely of other things blowing up in other parts of the world?
Well, it does. I mean, I think just from a military perspective, it's difficult to sustain support for Ukraine and to support them economically when the United States and other allies and partners are squeezed elsewhere. We heard John Healey talking about increasing defense spending, but if the cost of energy is going up and all the components that are going into it become more expensive, it's really hard to deliver on that promise.
We also heard from the new Prime Minister, Andy Burnham, and it's very early days, but actually almost, opening more cooperation with the U.S. by offering them the use of certain bases. Will that change compared to what we've seen from European allies?
Well, I think Prime Minister Burnham's gotten off to a very pragmatic start. It was a good choice to appoint John Healey as Chancellor. Given his history as the Minister of Defense, it sent a very positive signal that this government is serious about what they say on that link between economic security and national security. And so if anybody knows where the bodies are buried and how to deliver on defense spending, it's John Healey, given his past in the Ministry of Defense. But, I think it remains to be seen. There are a lot of pressures. Prime Minister Burnham Burnham has also said he's focused on delivering for people in the regions and has really linked defense spending and national security to more domestic priorities like creating jobs and economic growth and investment. So I think we can expect to see a relative focus on the United Kingdom's near abroad, so that NATO first policy that we saw in the Strategic Defense Review, probably see a doubling down on commitments with countries like Norway and Denmark, where there are defense industrial returns on both sides. And we might see a little bit in the Indo-Pacific, but I expect to focus on the regions in and around the UK that have an economic kickback.
Rachel, I mean, we're also hearing, Ukraine has been hitting Putin's economy on retail giants like the Russian Amazon. Is this a change in tactic, or are you seeing how are you seeing that develop, especially as Zelensky also bowed to the protesters and had to remove someone that he put in office a short time ago?
Yeah, well, I think it's continued pressure in the same direction. Ukraine is really upping the game to pressure Russia, not just on the battlefield, but economically, and make the cost of doing business more expensive. I think Russia is under tremendous pressure, both tactically on the battlefield and economically. Tactically, we're seeing that not only are they not gaining new territory, they're failing to hold areas that they once occupied. Yeah. And economically, almost zero growth, increasing inflation, a degradation in the reserves in the sovereign wealth fund. And if the Ukrainians and their allies continue to push on both fronts, both on the battlefield and economically, to target those refineries, to target those warehouses, to create more focused sanctions that limit Russia's ability to get that oil and gas out, that I think will only increase the momentum that Ukraine already has in this conflict.
So do they really have a tactical advantage? I mean, something that was really kind of unthinkable 2 years ago.
It's difficult. I mean, I think every kilometer is fought hard on each side, and ultimately there will have to be a political solution, and this will not be decided on the battlefield. But certainly the Ukrainians are better trained. They've learned from the Russian doctrine and tactics, and they're responding. They have long-term economic support that was signaled at the NATO summit a few weeks ago. I think they're in a strong position.
Thank you so much, as ever, for joining us. Rachel Ellehuus, their Director General at the Royal United Services Institute. Now, John Healey, the new UK Chancellor, has vowed to meet fiscal rules with a buffer. He's been making a pro-business pitch here in the City of London this morning as he spoke to senior business leaders at Bloomberg.
First, fiscal discipline. Fiscal credibility is the bedrock of economic stability, just as it is of national security. And the Prime Minister and I have talked together about how we will work in lockstep to ensure that we meet our fiscal rules with a buffer against uncertainty. Second, growth in every postcode, with every government department being a growth department, making the fullest possible use of public investment within our fiscal framework and bringing private and international investment capital to back Britain. Third, backing Britain. Buying British as a government at all levels, not just if possible, but by design, so that every procurement pound in Britain works to support British jobs, British apprenticeships, British skills, and British innovation in transport, in energy, in AI, in tech, in defence. Fourth, driving wealth creation. I want government decisions to raise the levels of investment, of innovation, of confidence, and of profit in British-based businesses. And I want Britain, just as I argued in defence, to become the best place in the world for those with ideas who want to start and grow a business. And fifth, to make life more affordable, bringing down the cost of living, but also the cost of doing business, helping to give people a greater control over their lives again.
Well, that is, of course, the new UK Chancellor John Healey speaking here at Bloomberg just 72 hours after his appointment. Now, Bloomberg has also learned that OpenAI's advanced AI models completed an attack in hours that would normally take a skilled hacker several weeks in the incident which breached the internal systems of AI startup Hugging Face. Now, OpenAI said it notified law enforcement and other authorities and has been transparent about its findings. Bloomberg opinion columnist Parmi Olsen has been researching the next generation of AI models and has described some recent breakthroughs as genuinely scary. Now, she's written about the development of AI in her book, Supremacy AI, ChatGPT and the race that will change the world, and Parmi is here now. Parmi, thank you for joining us. I mean, I love the book. I also loved, I read all of your columns, and basically you're talking about the fact that recursive self-improvement is something that you're worried about. So talk to us about some of the models that you've been looking at.
Yeah, so, and this ties in a little bit with the OpenAI Hugging Face hack, but essentially a lot of AI labs, the top labs from Anthropic, OpenAI, Google, and then a raft of new startups are investing billions of dollars into building AI that builds itself. Right. So you don't even need the researchers necessarily in the loop. You know, and Anthropic has said, look, we've got our AI tool that's writing most of our code now. Humans are actually becoming the bottleneck in the process of building software. And so there's now this new kind of race, a race within the AI race, to build what they call recursive self-improving AI systems that improve themselves. And some say this could be great for scientific discovery. Mm-hmm. And of course, if you're a big AI company that wants to make a lot of money, you've got an IPO coming up, you want to show you've got this new technology that's really going to keep you on the frontier.
But is it going to generate revenue, or is it just a race to be first?
It's a bit of both. I think the idea is the more powerful and capable your model is, provided it's also safe and can be properly regulated and overseen, then yes, it could bring in revenue depending on who your clients end up being.
Where do you see the latest AI risks, given this news that was shocking to many about the OpenAI hacking Hugging Face?
Well, so absolutely. So on the topic of the self-improving AI, when I spoke to executives who are building this technology, they said not to worry too much, because I was worried. And I was saying, well, what about if it spins out of control? And they said, well, we're building it in a sandboxed environment. And a sandbox is a very jargony tech term that refers to a kind of a digital boundary put around software. It's just more software to keep other software from kind of leaking out onto the internet. Now, what we found out yesterday and the day before was that OpenAI was testing the cyber capabilities of its latest model, and that model did break out of its sandbox because, again, these are essentially lock pickers. These models are becoming so sophisticated, and sandboxes, these digital walls, have bugs. They have vulnerabilities. So they managed to get out. They took a step-by-step approach to find more vulnerabilities, and they did get onto the internet. Now, the key here is this wasn't the AI going rogue because it wanted to wreak havoc. It literally just wanted to fulfill the objective it was given, to carry out a test and get a good grade. And the way it did that, it's going to go to the website that had all the answers, broke in and got them, but in the process completely freaked out its engineers.
So, I mean, with the freaking out, so I guess a good thing is that actually they were very transparent about it. I mean, they said
yes and no. Okay. They were transparent about it. Yes, that's encouraging that OpenAI fessed up. And I say fessed up because actually last week was when we first heard about it from Hugging Face. Hugging Face was the French company, the AI model repository that said, we've been breached. We know it's a frontier model, but we don't know who. And then OpenAI a few days later finally said, okay, it was us. We're collaborating with Hugging Face. The thing OpenAI hasn't said is, did they actually tell the AI models, do not hack to try and get your answer and to fulfill the objective? And that would be really interesting to know, because if they did say that, then that is a real kind of unsettling example of misalignment, where the AI model has gone directly against what the human creators told it not to do.
But pardon me, and we've had this debate before that not everyone, they're not only good actors in this. So does this show? I mean, if this can happen with supposedly someone that's a good actor, what does it tell us about the bad actors?
Well, first of all, how do we even define good actors and bad actors? But to your point, Anthropic actually really focuses on that. They had a blog post earlier this month on AI that builds itself, and they kind of acknowledge that this is a potentially risky place to be putting their research. But they said, better that, and I'm kind of summarizing their words, but better that we focus on this. We can't pause it. We can't slow down because less cautious actors, and they don't name names, but less cautious actors could catch up and could end up pursuing this research in a more dangerous way. So long as these large AI companies see themselves as the good guys, which they do, and they sort of have to financially, I suppose you could say, they will continue to pursue this research and run at it at speed, whether it's cyber AI systems that can hack out of their own sandboxes, AI systems that can self-improve, all this rather unsettling stuff, because they are caught up in these race dynamics, and there's no one telling them to slow down.
Okay, Parmi, thank you so much. I have a million more questions. We'll get you back on with you soon. Bloomberg opinion columnist Parmi Olsen. Coming up, EasyJet profit takes a hit as the conflict in the Gulf increases fuel costs and puts people off traveling. We'll have plenty more on that next, and this is Bloomberg.
Two things happening simultaneously when I started as a CEO. The first was aerospace industry started growing, and at the same time ChatGPT came in and AI started becoming an important conversation. I always felt that we need to simplify. Aerospace has a huge growth potential in front of it. Automation business have a huge growth potential in front of it with AI. And when we did the work, we found that each company can stand on its own feet with these growth vectors, which went toward this decision.
Vimal Kapur there, the Honeywell chief executive, on why he chose to split the conglomerate into three parts. The company reports earnings later today, and of course you can listen to the full episode wherever you get your podcasts. Now, EasyJet shares surging after reporting third quarter results broadly in line. The rebound comes after the British airline fell the most in 4 years yesterday on a report that the EU may review its airline ownership rules. Let's get more from Sid Phillip, Bloomberg's global aviation correspondent. So, Sid, hey, it's great to have you here. You're here for Farnborough, but how is the outlook actually, going in the next quarter?
So for EasyJet, they're looking at obviously see how they can sort of get their business going. I mean, they're trying to see, in Europe, the airline industry has been harder hit than the US, where airlines having to see later bookings, they're having a sort of, people are sort of balking at paying higher fares, whereas in the US, business seems to be booming, especially for the carriers like Delta and United. So EasyJet's talking about how they're seeing bookings closer in, they're seeing bookings that are closer into the date of travel, but they are also seeing low double-digit bookings growth in their holiday business, and so that's been driving a lot of their profitability and future outlook. At the same time, obviously, the carriers are still at the mercy of customers who are sort of holding off on paying higher prices, and then they have much higher oil prices. So they have to sort of find a way to bridge that gap between much higher costs and yields that may not be as high as they would like them to be.
So there are also reports that the EU may review its airline ownership rules. What does that mean for EasyJet?
So for EasyJet, I mean, which is in the midst of a bidding war between two US private equity firms, Castle Lake and Apollo, EasyJet is caught in the middle of that, and there is concern from investors that the EU might sort of look at it and say, hey, EU ownership rules demand that a majority control of an airline is by an EU individual or EU firm, and so they may determine that these US PE firms, which have talked about how they plan to get around the EU rules using some European executives, may not actually be able to get those deals through European approvals, and that might sort of scupper those deals, and then EasyJet's back to where it started from.
So interesting, Sid. Thank you so much. It's nice having you here for the Farnborough Air Show. Sid Phillip with the very latest on EasyJet and some of the airlines here in Europe with renewed interest from the US. Up next, it's Bloomberg Brief, and this is Bloomberg.